When I walk my dog around, I usually listen to some podcasts or other educational stuff on Spotify. And recently I've been listening to many value investors podcasts. And in this video I want to share with you their lessons about portfolio allocation. How are they able to overperform? Recently I've been thinking about portfolio allocation a lot because I believe it's extremely crucial to overperform the market. You need to find the right way which fits your personality to overperform, which is not gonna be easy at all. Even more so recently. Indeed, recently if you missed the best performing stocks like Nvidia, Meta, Microsoft and so on, overperforming should have been pretty hard for you. And it is. It's really hard to overperform, but building a good portfolio allocation is gonna help you a lot. And today I'm gonna share with you which are, in my opinion, the three main characteristics of overperforming portfolios. This is not something I invented, I created. Everything is taken from the greatest investors in the world. Before we start, I kindly ask you to subscribe to my YouTube channel to help me reach 1000 subscribers. I would like to reach this goal within this year. And please also leave a like if you like this type of videos. The first characteristic of overperforming managers is that they use leverage. This is going to be very controversial because you always heard everyone saying don't use leverage, it's dangerous. And yes, it's absolutely dangerous, but it depends on the way you use it. Using leverage doesn't mean going 5x leveraged on a shitcoin. It means using a little bit of leverage. It could be 10, 20, 30, perhaps at most something like 50% of your portfolio in leveraged money. Someone can even go harder, but I personally wouldn't feel confident going harder than perhaps 50%. I never reached that level, but perhaps I could at some point. Even Warren Buffett actually uses leverage. He uses the insurance business to build the float, which is going to be used in his investments, so he technically uses leverage. But every overperforming manager uses it. And if you think about it, this is very normal. Think about any business. Everyone uses debt, and leverage is debt. You just have to be very careful and you must avoid overdoing it. You need to be controlled on the use of leverage. The second characteristic of overperforming portfolios is that usually they are concentrated. The best investors build pretty big positions, above 10% each, and usually they have around 70 to 80% of the portfolio in 10 or less stocks. For sure there are, and there have been some exceptions, but they are not the rule. It's really hard to overperform having a lot of positions. Even more so for small investors like us. Don't type in the comment, Renaissance has I don't know, thousands and thousands of positions, because it's a totally different way of investing. If you want to get away from the index, you need to focus your portfolio, you need to concentrate in a few positions. Of course, if you fuck up, this is gonna backfire, you're gonna lose a lot of money, you're going to underperform probably. But this is one of the few ways you can actually overperform the market. Finally, the third characteristic of overperforming managers is that they are able to admit their mistakes as fast as possible. They admit the mistakes and cut the losses as fast as they can. On the other side, they let their profits run. If they have good investments, they let them run and make a lot of money. Being able to admit your mistakes is going to be extremely hard because it means admitting you were wrong and you fucked up. So it's gonna play against your ego, but you need to do it if you want to be a profitable and overperforming manager. Let me know which are some characteristics you think a portfolio need to have to beat the market. Type a comment. And please remember to subscribe to my YouTube channel and leave a like. See you next time. Bye!